Tesla takes a sigh of relief this morning. This is what I'm watching, David, and no doubt you're watching it too. So the company delivered more than 53,000 Model 3 vehicles in the third quarter. The stock inching into positive territory after a monster rally yesterday. Joining us now on the phone is Romit Shah, Instinet senior analyst. He has a neutral rating on Tesla and a price target of 300. Romit, walk me through the numbers that we got today. What do you think of them?
Across the board. Total deliveries, a little over 83,000. Our estimate was around 80. Model 3, importantly, came in at 56,000, which is a little better than consensus. And surprisingly, they also posted pretty solid results for their Model S and Model X vehicles.
So, Romit, do we believe this is sustainable over the longer term, or even could they increase it?
I think they're definitely sustainable. In fact, I would expect that deliveries continue to increase in the fourth quarter and into next year. Keep in mind, they haven't even started leasing the Model 3, which is how most consumers prefer to finance their car. They haven't started shipping the Model 3 overseas in Europe and China. So I still think there's a lot of runway for them to grow.
How many cars can they produce in their given facilities before they have to have capital investment to expand them?
About 500,000 per year. And they're at 83,000. They're run rating at call it 325,000 or so vehicles. So they've got room to expand capacity, or they've got room to grow before they have to add meaningful capacity.
Hey, Romit, what did you talk about? What did you make of what Tesla said about China? They're saying that Chinese tariffs are taking a toll. They're working at a price disadvantage of like 60% versus its Chinese peers. Walk me through what you heard. Yeah,
I mean, they're getting killed in China, which by the way, is not a insignificant region. I mean, they've scaled China up to I think close to 20,000 cars per year last year. They've grown quite significantly. It's the largest market in terms of electric vehicle adoption. So China is a very important part of the growth story, not so much for this year or even next year, but once you get into 2020 and beyond. And I thought an important statement from the release was that they're accelerating their plans to build local manufacturing in China. When they do that, then some of these punitive tax measures that are being imposed on the company will dissipate.
Romit, briefly, how many cars do they have to make and sell in order to break even on a cash basis going forward?
I think they're there now. I mean, whether they're at a slight profit or at a slight loss this quarter, I think you're looking at it here. 80,000 plus deliveries a quarter should get them to break even. And in the fourth quarter, if they're able to increase deliveries, which we think closer to say 100,000. Then I think this company is going to be profitable and probably sustainably so.